Welcome to this week's roundup of key business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's top headlines. President issues gazette allowing vehicle imports. Experts say Sri Lanka is safe from Trump's trade policies. And Lanka LIOC and Ceylon Petroleum Corporation to develop trincomalee oil tanks. In our top story this week, President Anukumara Dissanayake issued an extraordinary gazette on Monday, easing vehicle import restrictions with conditions effective this Saturday. Passenger vehicle imports banned since March 2020 will now be permitted under strict conditions. Cabinet spokesperson Dr. Nalinda Jayatissa stated that only 3 categories of vehicles will be allowed, with a total foreign outflow cap of $1.2 billion, with passenger vehicles being the 3rd category. Importers must register vehicles within 90 days or face a 3% CIF price penalty. The move is expected to boost government tax revenues, which previously stood at 200 billion rupees from vehicle excise duties before the restrictions. Authorities will closely monitor market price fluctuations. Sri Lanka is expected to remain insulated from US President Donald Trump's trade policies, as frontier markets are largely shielded from such shifts. Speaking to Reuters, Roundup Emerging Market Portfolio Manager Thierry Larose noted that countries like Sri Lanka, Nigeria and Paraguay are not immediate targets for US tariffs, making them attractive to investors seeking stability amid global trade uncertainties. With Sri Lanka recently emerging from debt restructuring, experts see new growth opportunities. While frontier markets carry unique risks, they are considered less vulnerable to the volatility affecting larger emerging economies, offering investors a powerful tool for diversification. Sri Lanka's central bank kept its policy rate at 8%, citing ongoing deflation, driven mainly by a larger-than-expected electricity tariff reduction in January. Inflation is projected to turn positive by mid-2025 and stabilize at 5% in the medium term. The economy continues to recover strongly, with private sector credit surging by 193 billion rupees in December, supported by lower lending rates. Meanwhile, yields on government securities have declined, signaling reduced sovereign risk. Despite concerns over liquidity forecasting, analysts praise the central bank's deflationary strategy, which has kept inflation below 2%. Easing global commodity prices have further contributed to economic stability. The government is renegotiating the terms of the power purchase agreement for Adani Green Energy's proposed 484-megawatt wind power project in Mannar. The new government has proposed a lower tariff of under 6 US cents per kilowatt, significantly reducing the previous rate of $8.26. The previous government signed a 20-year power purchase agreement despite lower bids from local companies. In response, the cabinet has appointed a project committee and a negotiating committee to reassess Adani's proposal. Adani Green remains committed to investing over $1 billion in Sri Lanka's renewable energy sector, aiming to support economic growth and sustainability initiatives. Lanka LIOC and Ceylon Petroleum Corporation are set to develop 61 of the 99 oil tanks in the Trincomalee oil tank farm with a $71 million investment. LIOC will hold a 49% stake, while the remaining funding will come from foreign debt. With Sri Lanka's fuel consumption projected to grow at 7% from 2024 to 2027, the upgraded facility will support both regional and local bunkering operations. Meanwhile, plans are underway for a 70-kilometer Indo-Sri Lanka fuel pipeline from Nagapatnam, India to Vaunia, further strengthening LIOC's role in the country's energy market. The all-share price index at the Colombo Stock Exchange continued its upward trend, now surpassing the psychological 17,000 mark. The banking sector has been a key driver of this momentum, fueled by re-ratings by broker firms based on possible impairment reversals following the completion of the external debt restructuring. In this week's tourism update, in the first 26 days of January, Sri Lanka welcomed over 212,000 visitors. While daily arrivals were recorded at 8,186, this marked a rise from the 8,037 recorded in December. India remains the largest source market in the month, followed by Russia and the United Kingdom. At the Treasury bill auction held on Wednesday, yields on all maturities fell for the 8th consecutive week. Bids amounting to 479 billion rupees were received, of which 182 billion rupees were accepted. The Sri Lankan rupee depreciated against the dollar this week, with the central bank's indicative mid-spot rate ranging between 297 and 299 rupees. And that concludes our update for this week. For the latest on economic and business developments in Sri Lanka, subscribe to our YouTube channel below. We'll be back next week with more insights. Thank you for tuning in. Stay safe.